Good afternoon, everyone, and welcome to this afternoon's session on the broad theme of trends in private markets that we started with exploring this morning. My name's Tim Hames. I'm here with 17 Capital, Level 2, Booth 442, for those of you interested, and it's my pleasure to be the chair for this afternoon's set of sessions. We're going to start with a fireside chat. Always tricky when you have no actual fireside. But to oversee matters, it's my great pleasure to introduce as moderator Jan-Enrik Forster, a deals reporter with extraordinary wide brief for Bloomberg Business News.
Thanks very much for the intro. Yeah, Jan Forster, I'm a journalist with Bloomberg News. I would like to introduce Vincent Policar. He is co-head of KKR's infrastructure practice in Europe. It's a 50 billion global fund. It's a relatively young business for KKR. I think you started it in basically in the financial crisis. And I feel like you've done a lot this year already. Quite high-profile transactions. We are always following very closely. Let me start with a simple question, just to get everybody on the same page a bit. Telecom Italia would have been probably the biggest buyout in Europe ever, right? Lots of leverage, though. Looking at these deals, you see that lines are getting a bit more blurry between conventional PE deals and infrastructure deals. If you just zoom out a bit and explain what really the difference is between an infrastructure deal and a conventional buyout.
Yeah, no, obviously very. Is that working? Yeah. Very good question we get quite often as well. Maybe just a couple of ways to answer it. The first one is, what is infrastructure? How do we define that at KKR? And I recognize that probably different firms will have different definitions. 15 years ago, when I started investing in infra, and you would ask an infra investor, what is infrastructure? The answer you would get was, an airport is infrastructure, or a power plant is infrastructure. And we always felt at KKR that definition somehow misses the point, because those assets can be regulated in some cases, they can be contracted, they can be fully exposed to merchant forces as well. And so for us, infrastructure was really always about the risk profile of what you buy, the fundamental characteristics of the businesses, and we looked for a few attributes, stuff like how correlated are you to the economy. Do you have inflation protection? Do you have pricing power with those assets? So it was a bit more esoteric in a way how we define infrastructure, but we felt this is a much better compass than just looking at sectors. So that's maybe just to set the scene. What is infrastructure at KKR? And then if you look at something like Telecom Italia, candidly, then the analysis becomes, okay, this is an integrated telco, and to your point, they have a lot of infrastructure in there, so the fixed network, the towers, they have data centers, so a lot of those infrastructure assets, but equally parts of the business that are, candidly not infrastructure in our book. And so the analysis really becomes, how much of the business is infrastructure, and do we pay for the bit that is not infrastructure? And basically, when we did the work on a number of companies in the past, and Telecom Italia was a good example of that, the conclusion we came to is the vast majority of the value in our eyes really sits in the infrastructure business, and therefore if we are able to buy that company at a level which is attractive, then we can afford in a way to buy the bit that is a bit adding complexity and is not infrastructure in nature.
We have a bit of a situation at the moment where you have like very specialist buyout firms or single strategy asset managers, and then you have these massive platforms. KKR is one of them. You have multiple strategies. Why, if I'm from an investor's perspective, why do they invest in infra?
There are a couple of dimensions to it. I think the beauty, frankly, of those integrated platforms is, in a way, we can afford to be a lot more disciplined in our investing mandate. The reason why I'm saying that, frankly, when we started in infra 10 years ago, people would ask us that. They would say, okay, you're KKR, a bit back to your previous question, you're KKR, you're a private equity firm, so you tell us you want to do infra, but frankly, you're just going to take that capital and go and do more private equity deals with this. And we say, well,
you don't do that, right?
We don't. You got it. So we felt you're really missing the point, because we are already managing, 50 back then, probably 100 billion today in private equity. So raising what was at the time a 1 billion fund to do exactly the same thing makes no sense. So the whole point of having the infrastructure strategy is to really invest somewhere else in the, in the risk return spectrum. And because we have this continuum of strategies where we go from core infrastructure, core plus infrastructure, core PE, private equity as well, in a way, each of the strategies can really be very much focused on its mandate and making sure that all the investments we do really fit very, very well in that box. And so the irony of it is that, 10 years into this, the same people come back to us and say, well, actually, you're one of the last purists in infrastructure. Everybody else is buying a lot of things, calling that infra, which really it isn't. In your case, you're actually very much sticking to what you told us 10 years ago.
How do you source deals? Like, obviously, you did this, one example is Albioma, which was a P2P. So that's obviously a source of deal flow. You can go to companies and look at carve-outs, but I guess infrastructure is a bit more complex. Often, the state is involved. Give us a sense on basically when you're at zero, where do you start looking?
Yeah, so what you mentioned really at this stage are the two main sources of deal flow for us. So we feel there is a disconnect in the way public markets look at valuations for infrastructure assets versus private markets. And so clearly P2Ps, to your point, has been a big source of deal flow for us. So in the last 18 months in Europe alone, we took 4 companies private. We did a couple of P2Ps in the US as well. And we continue to see a disconnect there. And then the other one is really, as you were saying, it's really partnerships with corporates. It's not just necessarily the typical private equity carve-out where you go and you tell this group, just go and sell me this piece. It's really more partnerships with those companies. So we go into those partnerships. We have a lot of flexibility, frankly, as to what the structure of the transaction is, what our level of ownership is. So we can be majority owner, we can be minority, we can be 50-50. But we really try to push these partnership topics as a way for those companies to fund, a lot of the capex that they couldn't otherwise.
4 P2Ps, that's quite remarkable. Are your buyout guys sometimes jealous of? Back to the point of state involvement, how important are kind of relationships to governments in infrastructure investment?
It's critical. It is our license to operate. We have to be, frankly, an acceptable owner, an acceptable shareholder. If you think about, some of the deals we have done recently, to me, the one which is the most exemplary on that. 2 years ago, we partnered with Telecom Italia. You were talking about that earlier around their fixed network. And so the partnership is we invest into the whole fixed network of Telecom Italia, and we turn that network, which is essentially a copper network, into a fiber network. So if you take a step back, you're really talking about buying the fixed telecom infrastructure of a G7 country. This is absolutely critical, from an economic standpoint, social, candidly from a security standpoint as well. And so we would think that there are very few people in the world that are acceptable owners and acceptable stewards of those assets. So we spend a lot of time with public stakeholders, making sure that they understand who we are, they understand how we operate, they are comfortable with us as an owner, because when the day comes that we want to buy something, that comfort and that trust needs to be there.
What excites you most at the moment when it comes to the different sectors of infra? Obviously, you mentioned telco. There's all this thing around fiber networks. Now, obviously, energy is a big topic. But if you would steer us a little bit on where your mind is at the moment.
Yeah, clearly, if you take a step back in the last 10 years, we have done 2 things for the most part. It's really digital infra. So as I was saying, it's mobile towers, fiber networks, data centers. So that has been a big part of what we have done, and that remains the case. Probably but that, in my mind, in a way, is an opportunity that will still be there. If you think about fiber networks, the next 5 years in Europe, a lot of those things will be built, and then you have it, right? And it's here for 50 years, so you will have to wait for the next wave of investment in telecom. What is, to me, a much more, a much bigger and more long-term opportunity is really around energy transition. And because energy transition 10 years ago, when we started, was really just basically buying renewable assets, so wind farms, solar parks, and that's good, and we continue to do that. But today, it's a much, much broader definition than that. You have the whole energy ecosystem that needs to decarbonize, the whole mobility ecosystem that needs to decarbonize, the whole industry. If you think about all the energy intensive industries in Europe, and you look at the energy consumption they have, that energy is primarily fossil today. We have the ambition to keep an industry in Europe, but we also have the ambition to work on the environment. And so you need to reconcile those two things by really transitioning those industries. So that's a big vertical as well. So to answer your question, that to me is the biggest opportunity, energy transition and what it means for the energy sector, but also for transport, also for the industry. And I could talk about real estate and other things as well.
Mm. Do you sometimes in deal negotiations, back to the point on state involvement, do you get a lot of pushback as well? I feel like maybe states would say, look, we don't want a private equity fund investing in our infrastructure. Also, we should do that basically.
Remarkably little, especially if you look at the current environment. I think everybody acknowledges the needs that we have around investing in energy transition and telecom. Equally, I think governments in Europe acknowledge the fact that the public money available for that is never going to be enough for those goals, and so the need for private capital investing, but not just the capital, also the expertise that comes with it. Because again, if you take fiber, we have now been building fiber networks in 5 countries in Europe. Arguably, we have built most of the telcos. So it's not just capital; it's also the expertise we bring, and this is something that all governments want and appreciate. So I honestly can't remember a situation in the last years where a government would tell us, we are going to do this. We don't need you guys for this.
So there's a role to play. What about the return profiles? I'm intrigued. Back to the question: why would an LP invest in your infra fund when returns in buyouts are usually higher?
I would say there are a couple of components. I think obviously LPs look at those returns on a risk-adjusted basis. So yes, clearly you're going to get higher returns in private equity, and even more so if you do venture or growth capital, but obviously with a very different risk profile. And so for an LP, it's really a matter of capital allocation, portfolio diversification, and on a risk-adjusted basis, if you manage to get a low to mid-teen return on infra versus high-teen, low 20s in PE, that feels attractive to a lot of LPs. So that's one answer. The other one is our product is not just about the overall return; it's also about yield. So we promise a return target. Typically in our core plus funds, as I said, low double-digit equity returns. But we also promise 4 or 5% running yield on those investments, and that is something that is quite appealing.
And about the holding period for an infra investment,
Yeah, the holding period is obviously longer dated as well. So today we have 2 strategies. We have a core plus strategy, which is a close-ended fund. So there we are looking at, typically 10 to 12-year holds. And then we have a core strategy, which is actually open-ended. So in that case, we invest into the companies and we don't have to divest them.
How do you see it? We talked at this conference a lot about it. Valuations were super high, and now the whole environment is changing, right? Cost inflation, rising rates, geopolitics, and so on. How does, if you square that with basically your world, what's the risk?
Yeah, so I was in New York a couple of weeks ago, and I sat down with our chief economist, Henry McVeigh, very, very smart guy. I only understand 10% of what he says. So I try to keep my questions quite simple, and I told him exactly that. So Henry, the world is really in a dark place. I have all this capital to invest. What would you do? Would you stop investing, or would you wait for basically things to adjust and valuation levels to adjust? And he said, well, yeah, Vincent, you can do that, but you're going to wait for a very long time. So I think the view we have is, if we do our job well, the kind of things that we invest into, back to the definition, should be reasonably immune to what is happening out there, because we have very little correlation to growth, very little correlation to inflation, very little correlation to commodity prices, and so candidly, most of what we buy should be largely isolated from those trends. And then from a financing standpoint, there is obviously plenty of equity available in the infrastructure space, so that's not the issue. But also more importantly, the lending market is still very much constructive. So while in some other asset classes, it can get more challenging to get financing, in infrastructure these days you can raise pretty much the same amount of financing. So
So financing is not a constraint for you?
It is not a constraint, no. So quantum-wise, you can raise that financing. Obviously, the cost of that financing went up a little bit. So that is something that you need to reflect in your underwrite, but fundamentally, the financing is there for those deals.
It's it's also an asset management game to some extent. How important is it for you that you do big ticket deals, like something that increases your AUM?
Yeah, I mean, obviously we try to focus where we have a competitive edge, and clearly the size that we have achieved today is a competitive edge. As we mentioned, 50 billion AUM, you literally have 2-3 other people of that size, and therefore, in any situation we look at, I would expect to have, a couple of other people that can do that. Which obviously means that the odds are pretty good from the start, and therefore this is candidly where we focus, making sure that we focus on those transactions where the capital formation piece of that is a big differentiator.
And back to the point on valuations, is it an infra? Do you feel is it too high? Do you think it adjusted and now it's kind of representing fair value?
So, I mean, there hasn't been candidly any adjustment. If you like at the last, 6 months or even couple of years, in spite of COVID, in spite of, what is happening more recently, valuations haven't changed in the infrastructure space. Now, you can debate whether they are, too high or too low, but there hasn't been an adjustment in valuations. Again, our view is that we find actually pretty good opportunities in that market. We have been deploying quite rapidly. I mean, you mentioned that this year. At the type of return levels that we are targeting. So, we feel there is a good market to deploy capital.
Anything else that worries you at the moment, just beyond the things we discussed?
No, I think the point you raised on, governments and how they look at infrastructure is obviously something that we are quite focused on. If you think about the different types of investments we do, we invest in regulated assets, we invest in basically contractualized assets where you take counterparty risk. And then we invest in assets where we feel there is a strong market position. When it comes to the first bucket, regulatory risk, obviously in crisis times, you want to make sure that, governments hold, their side of the deal. But so far, things have been quite stable on that dimension.
Is it sometimes internally when you discuss deals, and especially in the sourcing process, that, there's a debate about whether this is an infra deal or not an infra deal?
Clearly, because we have this definition, which is not, in a way, obvious, you really have to go and do the work. So we have this debate each and every time. And so, when people come to me and say, okay, I have this asset in this sector, in this geography, is it infrastructure? 9 times out of 10, my answer is, I don't know. And so people think probably I'm clueless on infra. But it's really because you have to go and do the work. And when there are cases where it's not obvious, and it could be an infra deal, it could be a private equity deal, we just look at this, jointly between the private equity business, the infra business, and each and every time within, a day or two of work, it becomes very obvious where that sits based on this risk kind of analysis that I described before.
When it comes to basically improving a company on an infrastructure asset, obviously very different cases, but is there something where you would say, okay, this is something we always do, that's our playbook, in the first 30 days, I don't know, you probably don't cut costs, right? It requires investments, but is there something where you see that's a common theme, something we can always improve in our portfolio companies?
I wouldn't say there is a common theme. And clearly, we take a very active approach, so that's where the KKR DNA kicks in, I guess. So we like to look at those companies. We like to look at things we can do better. We do this assessment you were talking about. We call it the 100-day plan, which is really something we develop. I'm not sure why we call it the 100-day plan, because it takes us 6 months usually to come up with it. But we come up with that plan, and then we look, to your point, at everything we can improve in the business. Typically, to your point, the companies we buy have a tendency to have been somewhat undermanaged. So, usually you have some low-hanging fruits around, working capital management, how they take, investment decision, that kind of things. But it's more a kind of a broad review as opposed to kind of always using the same features.
Maybe Albioma would be a good example, because it's such a recent investment. I think it's also an interesting one, right? Biomass company. Is there something that you...
So Albioma is very much if you think about the 2 levers we have to improve companies, one of them, to your point, is really improve the efficiency of the business. The other one is really to invest and grow the platform. And Albioma is 100% about the second category. For those who don't know that company, it's an energy producer. They burn today a mix of coal and biomass to produce electricity, and they do that in the overseas territories of France. So, Guadeloupe, Martinique, Réunion, a lot of these very tough, places. And so, that business is really about transitioning the energy mix because, today, as I said, it really burns still a fair bit of coal. Clearly, the objective by 2030 with Albioma is to have 100% renewable energy mix. So we will convert all the plants from co-burning coal and biomass to full biomass. So the equity story there, candidly, is quite simple: investing in the system and turn that into a green energy producer.
Geopolitics, so obviously nobody knows the outcome now of Russia's war in Ukraine. What's your thesis from an investor perspective for energy investment, basically, once the dust has settled? So what's coming next on that front?
No, I mean, it's a question we have been asking ourselves a lot, which was, with that crisis, with the implications in terms of energy security, what does that mean for the commitment of the European Union and governments to the energy transition? Because people could say, well, maybe we need to change our stance on that. My sense is that this is the opposite, because everybody was kind of committed to energy transition, but then we understand now the acute need to transition those energy mixes rapidly. So for us, we think that's really, for us meaning people that have the capability to do this energy transition well. We think this is a big opportunity because the ambition to transition is still there, and the sense of urgency in that transition has increased with what has happened.
So one example could be, obviously Germany, super energy dependent on Russia. Now they're trying to change it. Is there a thesis around that energy?
Simple example in Germany. We looked a lot. We have invested a lot in natural gas historically and the infrastructure around that. So a few years ago, we bought a business in the US, Sempra, which has LNG terminals. So they take this natural gas and then they export these. A few years ago, they would have exported all of that to Asia, basically Korea, Japan, China. This is where that LNG was going. And in Europe, because people were getting the gas from Russia, basically they didn't, and Germany in particular, they didn't see the need for that infrastructure. So you had a few LNG terminal projects, in the northern part of the country that were in permitting hell. They probably had been sitting there for, 10 or 15 years. And then the day, Russia goes into Ukraine, those projects got permitted within a few weeks. So this is the kind of opportunity that this crisis will really generate.
Which European country has the worst infrastructure?
Clearly the UK, that's where I live. Terrible.
Okay, I wanted to, are there any questions from the audience at this stage?
There, especially in energy, since UK government actually adopted a plan?
No, so we are investing a lot in the UK, frankly. If I look at the last, 2-3 years, we have done a number of infrastructure investments across the sectors I was mentioning. So we have invested in a fiber company. It's called Hyperoptic. So they build fiber optic networks in London. Again, that was a very selfish decision because I had no broadband at home, so I said I need to buy that business. So that's on fiber. We also bought last year, it was a P2P, a business called John Lang. John Lang is one of the main PPP, which means public-private partnership developers. So they do roads, rail projects, all sorts of projects around transport and renewable infrastructure as well. And then very recently, a few months ago, we announced that we were buying into a UK water company called Northumbrian, which belonged to CKI. So now we are partnered with CKI in that business to there again invest in the UK water infrastructure, which is much needed. So very much so across multiple sectors, we are doing our part to improve the UK infrastructure.
So it's obviously very important to society potentially. Would you say, I always wanted to ask a question. I never knew how to phrase it, but I just ask, are you culturally, do you feel you're different than the buyout guys?
I would say the The tools we use are similar, as I was saying. I mean, there are just a couple of differences, which is, well, obviously down to the risk profile, as I said. So, we are looking for assets with a lower risk profile and a more narrow distribution of outcomes. So, losing capital for us is a cardinal sin. We can't do that, but then obviously we sacrifice, some of the upside that our colleagues will go after. Clearly, the investment horizon, we talked about that already. So, we typically invest for longer in the companies. And then the last I mentioned is really around capital structure. So we would typically have less levered capital structures, also because we need to serve the dividend yield that I was talking about.
What's usually the split between?
In the last couple of funds, it has been 60-40 roughly, where we had 60 of equity, 40 of debt. So we go with fairly unlevered capital structures. So I would say those are the main differences. So in the end, we probably invest and manage the companies in a very, very similar fashion. But you have those few differences around capital structure, investment horizon as well.
Why are banks more relaxed to finance infrastructure deals?
I think
Especially now.
Yeah, no, I think it's back to the risk point. I mean, they just feel that the distribution of outcomes is much more narrow, and therefore, as a bank, it's a pretty comfortable place to sit.
What's your? Do you have any mega deals coming?
We're getting to the tough questions now. No, look, I mean, we talked about that. I think energy transition to me is the gift that keeps giving, and will keep giving for the next decades. I think we're just starting to, scratch the surface of what that means, of what kind of investments will be required, and it touches on all the sectors. I mean, it's not just an infrastructure or an impact issue. It's or just an energy issue. It's transport. It's the industry. It's real estate. I mean, if you think about it, we are a big real estate investor as well. 25-30% of carbon emissions is coming from real estate. So how do you decarbonize real estate? The gentleman who runs KKR in Europe for real estate is a French guy as well, Guillaume, and we spend a lot of time talking about that. So again, to me, energy transition is really both part of our license to operate. I mean, we can't be a good alternative asset manager without being good at that, but also the biggest business opportunity we have in the next decades.
What's the most common question you got from LPs these days?
What's happening? And what does that mean for your business? So we are hopefully able to keep them happy with the answer.
Well, then I hope we'll see a mega deal before the end of the year, though. It's always more exciting. There are obviously a lot of other telecom companies in other European countries, so there's a big peer group. Before I start, any other questions from the audience?
Hi. Just if infrastructure and the energy transition is the gift that's going to keep on giving, how do you perceive your competitor landscape? Because presumably that has to change if this is the gift that's going to keep on giving for another 10 years.
No, I mean today there is frankly very few people that have been focused and building capital at scale in that sector. I think it's not just about, again, focusing on that. It's also about the track record you have built. If you think about this, and the same was true for telecom. I mean, today it sounds pretty obvious to say, oh, I'm focusing on energy transition and telecom because everybody is telling the same story. We started doing that 15 years ago. And so the knowledge you have, the relationships you have, candidly, as I was saying, a lot of the deal flow is really down to partnership with corporates. All of that is something where we have built a 15 years head start on everybody else, and we do our best to try and keep it.
What's for corporate, obviously when carve-outs are a big source of deal flow, isn't it like infrastructure is so central to what, let's say a telco company would do? Why would they sell it?
Well, as I said, they do that in steps. So they are not just saying, okay, here is my infrastructure, just good luck with that. So they do that in step. But B, they recognize for a lot of them that infrastructure is not really a differentiating factor anymore. In the telecom space, 10, 15 years ago, people felt, if I have better mobile coverage or better fixed broadband, I'm gonna win competitors or win customers. Today this is not the case. So they realize this is not key to their strategy, huge investment requirements. So maybe they need to partly exit out of that and really focus on their core skills and their core capabilities, which is around customers, marketing, sales, and all those things.
Well, great. I guess we are running out of time. Thanks very much, Vincent, Polika. I hope you get a good deal until the end of the year. And yeah, thanks very much for all of that. Thanks.
Thank you.